Hey, greetings everybody. This is Jeff Scott, and I'm doing something that I don't usually do, which is just do this off the cuff without a lot of preparation. Those that watched me last weekend know that, or would have heard that I'm moving this week. I've got to take down my computer system. At one point I had like 9 monitors. I've been whittling them down as I realize the more monitors does not mean the more money you make. But I've got a lot of work to do the rest of the day and tomorrow, so I'm going to sneak this one in. I call this one markets and chop. I was going to make a joke and say that when the markets chop, our portfolios drop. But unless you've raised cash, it's a tough market to make money in. My name is Jeffrey Scott. For those who haven't been here before, my email address is hgsidoc@gmail.com. I welcome all comments. Here. For a disclaimer, this is for education purposes only. Anything I say and recommend is in the spirit of education, not investment advice. I am a physician, not a broker. I am independent. I pay for the tools that I use. And trading involves risk, and you alone are solely responsible for any decisions you make. This is being recorded in 4K. If you're watching this on YouTube and you have a high resolution monitor, you put your mouse pointer into the lower right corner. There's a gear and you can change the resolution. If you're watching this in low resolution, it's not going to be very good for you. I'm not going to spend much time here except to call out that I've learned from a lot of smart people, and a lot of the tools that I'm going to present and use today came from these people on this chart. I own a lot of software. We're going to use today TradeStation and Thinkorswim, HGSI, and EdgeRater. And within those programs, you'll see some of the Q tools and the Dr. K indicators. I may also look at TCNet today as well. I'm never paid by any vendor if somebody buys something that they see me use, and therefore I'm an unpaid volunteer, and this is just education. Speaking of vendors, I have a positive relationship with the owners of HGSI, George. He's put things in the program that I've asked for. I started doing these webinars, probably 15 years ago, mostly haphazard here and there to support users of HGSI and show them how I use the program. My program has evolved, programs evolved too. Free 30-day trial under investing strategies. You'll see hundreds of movies. And again, I get nothing if you subscribe. As always, where are we? We are clearly in a truncated top here. We can go higher, we can go lower, we can continue in a Darvis type box, but whatever we're doing, we're chopping around in this stage of uncertainty. Every time it looks like we're going lower, we get a move higher. Every time it looks like we're going higher, we get a move lower. And then we have the issue that not all indexes are working together. You put it together, you have choppy markets, and choppy markets can chop up your portfolio. So I highly recommend that right now that you've raised some cash, I know I have, maybe less positions and smaller positions, and don't be afraid to sell premium. If the market goes down and you sell options, calls against your positions, you mitigate some of the losses. Is it time to be offensive and buy contras and put puts on? I've got some on, but I'm more closer to neutral. I'm definitely, anything I've got to the downside is to hedge some of my risk. So that was it on the slides today. I bet you're happy about that. Let's see if I can open up and look at the internal. Let's start with Thinkorswim and let's look at the major market indexes. So I'm going to use futures. I prefer to look at futures. They capture, I think, more information, although when we get to HGSI, I'll go into the cash markets with ETFs. So here is 1 year's worth of the S&P 500 futures, lower left, upper right. One thing I've been talking about is we have clearly made no headroom going back. That was April 15th. We closed kind of right below where we closed on April 15th. Notice we've got this fib extension here, and we are having a very difficult time making any headway here. We are bouncing between this fib extension and the rising 50-day moving average. We are clearly in a sideways trading range. Can it break up? Sure, it can break up. Do we have one more leg up? We could. I certainly can't say we don't, but we're not making a whole lot of headway, and I think there's risk to the downside here. This is the S&P 500 futures. Let's look at the Nasdaq futures. Now the Nasdaq, let me go back to S&P for a second. The S&P on the week, 1, 2, 3, 4, 5, it closed up here the prior week, closed right below where it did the prior week. So it was down a tad on the week. Shooting star on Friday is never a good thing to see. The most recent all-time high in the S&P looks like, put my glasses on because you're probably thinking it's small to you. Well, it's small to me. May 10th. So May 10th, if we look at the Nasdaq futures, the last all-time high is April 29th, which I know it's the all-time high is because it's the high of the year, and this year we set new highs. Look at the interesting here, the 17 crossing below the 50. We failed at the 50. That's a bit of an ice hole failure. Again, is this bullish or bearish? It's got a person PPS buy signal. It was actually up on the week, 1, 2, 3, 4, 5, closing a little bit above, pennies above perhaps where it closed the prior week. But again, is this a positive market or is this another market that, heck, this thing's gone sideways all the way back through here? And that's going back to January. So going nowhere on the Nasdaq and probably chopping up some of your gains that you made in January and February. If I look at the Dow Futures, let me make this smaller. Whoa, wrong way, Jeffrey. I want to make it smaller, not bigger. There we go. Major run up, similar to the S&P on the timing of the prior top. It's pulled back. And again, let's look at closing here. We have gone back to the middle of April 16th. Again, sideways move, although some pretty wide volatility here. I guess there's a flag forming. I guess. Is this a flag on this whole run up? Is this bullish or bearish? Unlike the others, I'd be more bullish here. And maybe that's where the disconnect is because the Dow keeps going higher, but there's a lot of pain underneath, especially in the Nasdaq. The Russell this week, now look at the Russell. The Russell has not cracked and held above the 17 and the 50. The Russell's been in a sell signal. The Russell all-time high goes back to March 15th. But again, talk about sideways move. This market has been chopping for 4 months. It is very difficult for me as a swing trader who typically likes to play trends to make money in a choppy market. Those that are making money in this market have to be much more active traders than I can be. Yes, there have been some good swings in here, up and down, but they don't last long. So that's the Russell 2000 futures. Here is the VIX. It failed another run up here, although it's closed high up in its path right here, or path meaning recent time, but really failed at the 200. Not a big story there. And then the dollar, is a dollar putting in a bottom here. It's a little bit above the bottom from back here at the end of the year, but you have sideways move the last 4 days. I think the dollar will be something to watch. So am I real bullish on looking at that? No, I think at best we have sideways markets. Now, if I flip-flop this really quickly to the weekly, you can see how we've had major runs up, but sideways over the last several weeks on the E-mini, down over the last several weeks on the Nasdaq. Probably the best looking again on the weekly is a Dow, but going sideways. Russell sideways, VIX sideways, dollar is back down, although it's off its prior lows. So again, am I showing you a rip-roaring strong market that you're cleaning up in? Not if you're a growth stock investor. It's been a tough time for growth stocks. Now, I do spend a lot of time every day looking at the expected move charts from Don Kaufman. So let's just look at them, and I want to show you the essence of a sideways move. Here is the E-mini, and you can see it has been within the green and the red since April 12th, and that it's closed 1 week, 2 weeks, 3 weeks, 4 weeks, about 5 weeks in a row, kind of where it opened at that midline. So very flat, although we've had some significant moves during the week. I guess last week it closed at the lower end. Other than that, in the last 5, it's closed right at the opening area. That's the E-minis. Again, traded down a little bit, closed right below where it opened on the week. You look at the Nasdaq Futures. Last week, traded down, got back to the lower boundary. That became the new starting point. This week, traded down and actually got above the midline, so up move on the week on the Nasdaq. We look at the Dow Futures, similar to the S&P, traded below. And again, most of the time, prices are going to remain within this expected move and rebounded back and actually got up, although closed right below the midline, so down a little bit on the week. Don't spend much time here looking at the VIX, so I'm going to shut that down. So, chop, chop, chop. All I can tell you is there's chop here, and I don't know how to say it any better than that. Now, I look at certain things in TradeStation, so I'm going to go very quickly, and I'm sort of doing this live. I haven't spent a lot of time looking. So I'm looking here at Friday's results. The Dow, which has been leading the markets, a laggards RSI buy, but it's in a person sell still. It's green, which is bullish. It's in a weekly and a monthly buy. It's got a laggards RSI. I suspect that Dow, if it trades up on Monday, will give us a buy signal. It's at 58%, and it's got a lot of weekly MACD divergence dots, which tells me there's risk here, but the Dow, as we've seen before, is probably the strength of the market. S&Ps, also in a sell, although to get a laggards RSI, also green, which is bullish, blue in a buy on the weekly, blue in a buy on the monthly, a new laggards RSI at 52%. Again, the same thing I'd say about the Dow. If this one moves up this week, we'll trigger a new buy signal. The Russell is already in a buy signal and a laggards RSI, only at 22% at the high jump. It was coming from the bottom of the envelope. Yeah, it looks like it could go higher this week. And then lastly, the Nasdaq did get a new buy signal this week. So nothing is extended. All 4 indexes look interesting. It would not at all surprise me, and here's my prediction for what it's worth, for us to see a little bit more of a move up this week. I think that's possible. We'll look at more signals as we go on. But I really don't believe we're going to go out and test the highs. And if I had to predict, this might be a good year to sell in May, and it's May 22. Come back in the fall. The dollar, you see these green dots? The green dots tell me that you've got bullish MACD, not divergence, as I've been educated many times by John Person, convergence, a positive convergence. Well, we've got clearly have lower price here, and you look at the MACD here, it's less negative. So that is a positive thing. So is the dollar ready to bounce? Could bounce at some point. Doesn't mean it has to bounce this week, but I'll be watching the dollar. Now let's look at some of the internals. I think TC2000 is working now. It wasn't working. It is perfect. I went to do this a few minutes ago, and it wasn't working. All right. So here's how I do this. I've got base report. Let's start here with 10-year yield trended down this week, really sideways. Now, I think the message on the interest rates, in my opinion, is that you had them go up here, traded down, but we're sideways here. And I think what spooked the market was this rapid rise. I don't think rates matter as much here as they felt like they mattered over here. Again, I think it was the rapid rise that spooked the market, not the absolute amount. We'll see. So rates have modestly moderated on the week. They were down just a small amount. Let's look at the 30-year bonds. Also, the same story, massive run up, and then this week pulled back a little bit. Again, starting to moderate, still at the high, but no longer massively running. I like looking at AD lines. So if we look at the large cap stocks, and let's change this to the IWB, which is more reflective of the Russell 1000, which is the high cap 1000. So I look up here and I see that this week no divergences have occurred. We've seen both the advanced decline line in white and the index pull back some. Let's look at the mid caps and let's change this to IWM. Now, one thing that's different here, and just pay attention to the white line. Notice that we had all-time highs set here on the 1000s, the Russell 1000, but on the 2000, we did not set all-time highs. So there's a divergence between small cap and big cap. But like the big caps, the small caps have turned down this week. Perhaps one of the most impressive has been the Nasdaq, and you can see how well, let's put the Qs up here. And it's probably the greater Nasdaq that's even more important. But both the Nasdaq and its AD line have come back. But all we got is a Nasdaq 100 here. All right, let's go back, clean this up a little bit, take off the Qs, take off IWM, give me back my spiders. If I look at the NYSE, I see that it's down. If I look at the major market ETFs, the only one that looks like it was up was the Qs. You can see them right here. And with rates moderating, no surprise, TLT, which is well off its highs, turned up some. All right, now let's look at some measures of extension. Let's look at stocks above the 200%. Gotta go back to this one here. You could see that it really didn't change much this week. The index, the S&P 500, the SPY is in yellow. You can see that here. And we're looking at percent of stocks above the 200 days. So we've come down a lot, but still 65% of the stocks of the market are above their 200-day moving average. If I look at stocks above the 40-day moving average, wow, we've come down quite a bit. Now 50%. We were last May over 90, and we can go back here in January, we were in this range, 75. So we've come down a lot. So what do these two charts tell me? It tells me that the majority or many of the stocks in the market are above their 200 and less than their 50, above or below the 50-day moving average. That is not a healthy market. You want to see rising numbers of stocks, not necessarily to the levels up here at the top, but falling number of stocks above in this case, the 40-day is not bullish for the market. Now let's look at T2121, which is a new high, new lows. And we can see this was last week's here. So we move this down here. That's last week. And here's this week. So still in a market's done well range, but we've come off the top. If I look at the McClellan, I'm looking for three things. I'm looking for extreme readings. Don't see them. I'm looking for divergences. Well, we've been having divergence forever. We had higher prices and lower highs on oscillators and summation index and zero line rejects. So still got the divergence on the daily. I don't expect it to go anywhere anytime soon, and on the weekly. All right, so again, I'm trying to get a feel of this market. We're certainly not extended anymore. The AD lines have rolled over, showing me that there's clearly some weakness. Now I like to use EdgeRater. I've already run most of the scans. Let's take a look at what I've got here in EdgeRater. And let's start with Hindenburg on the NASDAQ. And what you can see here is there is no red lines. The last time I had a Hindi, on the Nasdaq was January 27th, 30th, and 31st as the market was getting ready to roll over. And you could see that the spiders peaked on this day and then they got back up to 326 here, 327, 329, and then they rolled over. So the Hindis gave us a signal that something was potentially going to happen. But again, we have set new highs. We're not at new highs right now. No evidence of Hindenburg omen on the Nasdaq. No evidence of a Hindenburg omen right now on the NYSE. If I look at the buckets, this is that's not what it's supposed to show. Let me go to the right ones. Oh, you know what happened? All right, let me see. Why did it do that? Let's just run the buckets real quick. It might be faster just to run them. I think when I hit a different date, but let's go back here. Change this to S&P 1500, hit run. This used to take me a long time to do it in HGSI. I could do it, but the different scans here are the different tools that I'm showing you in EdgeRater have made such a difference in how I trade and in the quality of my life, because if I can get back a half hour, an hour, you know, the funny thing is, and it must probably kills Chris because I talk about EdgeRater all the time, I probably use 10% of it. And it's just amazing what it has. 50-50 split. What does this tell me? It's neither bullish nor bearish. It means half the stocks are above the midline in their Bollinger Bands, half are below. And if we look at the distribution of stocks, this is a bell curve. We are neutral. We've been very bullish, so I guess going neutral, maybe that means something. All right, let's go back up here. What else do I got? U.S. markets here. Let's make these bigger. We look at this Woody indicator, and this was when the market was running up. We've been in chop since the end of April, as you could see here. A little bit of grain, but chop persists. And if I look at the sectors in EdgeRater, you could see that there is some strength. But that strength, let me just pull this up here, make it easy to see, is materials, energy, financials, technology. So weakness in staples, which is defensive, interestingly. Well, nothing really weak, but you can see where the strength is. There's really no red. All right, what else can I look at? Morales and Catcher code red. I run it against a great list to try and find stocks that might be interesting from a long or short perspective. Typically, I run this after I've looked at stocks, and this just gives me an idea of some of the things that look negative. You'll see some of these pop up again because several of these are what I found on my top-down review. Code blue would be those stocks that look bullish on this scan. And you can see we're going to look at worldwide entertainment again. Wisdom Tree ETFs I didn't pick. I did pick Aqua as one. PSXP, WMS, Copart, CPRT are all stocks that made it to my watch list. This is a M&K code blue. I typically run it against a big list, and I look at the ones that come to the top. These typically are some good stocks to look at. Seasonality, let me pull up the other ones. From a bearish perspective, you could see, and this is interesting, looking out 1 month. So let's look at this column right here. We have semiconductor bears have bad seasonality. Russell 2000 bears have bad seasonality. The Q shorts have bad seasonality. So if some of the short ETFs have bad seasonality, that means the market probably goes higher this week. Now, there's no guarantee of that. It just means over the last number of years, and you can see pretty high percentages here of up, down, where downs are favored, where the markets have moved up during this period of time. Up because the contras are going down. If I look at the bulls, these are some of the stocks that can make it bigger that were actually to the upside. A couple of things I thought was interesting. Tesla has been up 8 out of 10 years, an average of 12%. Tesla's sitting at a point of indecision. Quidel, proving that great fundamentals does not mean great stock action, has been up 19 out of 20 years with an average of 8%. It's due for a bounce. Does it get it now? This gives you some of the stocks with positive seasonality. To make it on this list, again, I'm looking at the 1 month. You had to have no less than 8 up years, no more than 3 down years, and more than 4% positive movement. All right. You can always stop this anytime and look at it. And I hope I didn't close them all. All right. And then what else do I have? The warehouse report. This is where I look at what was favored, growth or value. So here's ERG. ERG's EPS rank, 0.99 plus relative strength rank, 0.99 plus group rank. I'm using data that was generated last weekend, so it's based upon the most recent technicals and fundamentals, what happened going forward. And you notice the curve goes from upper left to lower right. This means poor ERG stocks outperformed. So EPS rank was good. High relative strength was good, but horrible relative strength rank, so junk off the bottom looked even better. Some of the distributing stocks the prior week actually outperformed. When I see this, I know I didn't make much money because that's the anti-growth investor curve. Now, if I want to look at this, I can look at, typically I show the group performance analysis in HGSI. I ran it already, so I don't want to take the time, so we just pull it up here. So this is another way of looking at the markets, and let me make this bigger too. All right, so I find myself and I see my, oh, that went too far. I can work with it though. My current Scott holdings, I was up 0.43%, but more than 2 to 1 losers, or not 2 to 1, 1.5 to 1 losers to winners. What I really want to look at is find out where the S&P 500 was and how I compare the S&P 500 was down 0.39. Then I want to look at things like the IBD 50, which was down 1%, the Marcus Smith 250 down minus 1.3. My buy watch, horrible, 1.6. My filtered buys minus 2.61. Technically strong stocks lagged this week, which is what we saw in the last report. So I did okay, but it tells me that growth was not in favor. I like to look at next week's news. Let's take a look at it here. I'm looking at Market Watch. Nothing major on Monday. We got some housing information on Tuesday, consumer confidence. I'll tell you, if and when we have a big miss here, that would hurt the market. Wednesday, nothing scheduled. Thursday, bunch of claims, revised GDP, durable goods. That's a lot of news move there. And then Friday, we got PMI, final consumer sentiment for May, core inflation for April. So I'd say a mixed news report, not a giant one. How about earnings? All I did is I went to Twitter, I searched for earnings whispers, and this, let me show you exactly what I did. I went into Twitter, I searched for earnings whispers, I found this one, and I love this depiction. So we got some e-vehicles and car dealers on Monday, AutoZone, a lot of auto stuff this week. Most of the big tech that I have is probably done. Zscaler, I'm not in that now. Nvidia popped this week, really looks interesting compared to the rest of the semis. Digital Turbine, APPS, has really taken it in the shorts. It's got earnings this week. Capri had done very, very well. This week I saw one of my biggest holdings, Abercrombie and Fitch, take it in the pants, selling off with the rest of retail. Got a lot of retail this week, especially in the back half of the week. So that'll probably impact on my my holdings. So I'll have to pay attention. As I like to say, it's a judgment call whether you want to hold the stock over earnings. Here's my Abercrombie. It's bad judgment to not know that your earnings dates are coming. So as I look at the markets right here, what do I think? What do I expect? I've told you I call this market chop. I think chop is still the basic direction that we have. See, now let's just walk into my favorite Q tool, which is Edge. Just see what we can learn about the market week. So first thing is we look at the buckets. As we already know, they're 50-50. I love the fact that I can look at current day and yesterday's because it gives me a sense during the market when we're starting to get oversold or overbought. Here we can look at the percent of stocks in each of the buckets. And again, when I start to see stocks above 10 getting to 20, 30, or below 0, 20 to 30, I know there's a reversal imminent. No longer do I have to wait to end of the day to run an edge rater scan. I can get this real time during the day. Here's the sectors on Friday. Today is Saturday, so nothing in red. The big winners Friday were energy, financials, industrials, materials, and utilities. 8 winners, 3 losses. Now, we're not going to look at this one because this was the same as this one. If we look at this week, we could see overall, over the last month, of 50-50. But if you look at sectors, industry groups, and stocks, whether I look at 10 days or 5 days, it's been a painful market. However, the last 2 and last 1 days, we're starting to see some green pop up. So are we about to rotate higher this week? I think that's possible, although I have very muted expectations of where we can go. If we look at sector performance, we already looked at 1 day, 2 day, let's look at longer. Over 5 days, only 2 sectors were up. Those were, over 5 days, the up ones were healthcare and IT. Over 10 days, everything was down, and over a month, 50-50. So not really been a super strong part of the month. Here's how I can do real-time top-down analysis using using Q Edge. Let me get my tools right. I'm going to hit this thing here. Make sure that was market close. That's today. Perfect. This is going to show me the sector view. And in the sector view, which we should, here we go. Let me make it so you can actually see it. There we go. I have a list of the 11 S&P sectors. You could see 8 and 3 on Friday, over 2 days, 10 out of 11, over 2 weeks, 0 out of 11. I can rank this by highest to lowest, and I could see strength on Friday, financials, energy, industrials. Notice industrials had turned around over the last 2 weeks, was down. Same thing with energy, which goes in and out. Financials have been strong going back some time. Now energy, which does go in and out on short time, has been doing really well going over the past year. Weakness, despite some improvement this week, end of the week was IT, communication, real estate. So if the money's in energy, financials, industrials, show them some love. Let's look at what are the industry groups in those 3 sectors. Again, this is a different approach to top-down than you see in HGSI. I use this during the day to supplement what I'm doing. We can see on Friday, 92 out of 147 industry groups were up. These are only the industry groups in financials, energy, and industrials. Let's rank them. Who are the best performers in the top sector? And we could see diversified, regional banks, drillers, refiners, diversified banks. Let's go and look at everything. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I'm going to go to the top 10 of the industry groups in these 3 sectors. Now let's look at the stocks that are in those industry groups. Now this tool, again, this is SagerNandy.com Q Edge. This tool is really limited in that it only looks at the S&P 1500 stocks. And I know there's no freaking way you can see what's here, so let me make it bigger. We have a list of stocks, and then we have some valuation, earnings growth, annual earnings growth, earnings, what are the earnings nearby, and then you can look at industry group, and then you have price performance, and growth rate. So you have a lot of fundamentals. But what I really do is I build this list here, of which there are a lot of stocks. And then I hit these 3 stars. And this is going to bring to the top undervalued stocks with good earnings prospects. Okay, so within the S&P 1500 and these industry groups, these are some that come up. Now, unfortunately, since these are what you would call fundamental analysis, I don't know if any of these are going to actually look good technically. But what I can do is highlight them, hit this grid, and I'm going to go over to my TradeStation, pull up this one, and potential buys, and let's just paste them. It didn't work. Let me try it one more time. Maybe because I hit it too many times. Let's try it. If it doesn't work, I'll do it the old-fashioned way. Here we go. So I can run through these very quickly and see if there's anything that looks technically good. Running into resistance, so we'll pass that one. VRTV, sort of an upward tending flag here. Sideways move, a new person buy signal. So VRTV, that one looks interesting. All right. Customers Bank Corp, things had a big move off of its weekly support near resistance. Next one. Helix Energy Solutions, new person sell. I'm going to skip it. Jefferson Financial, great run up, sideways move, not my favorite. STBA, S&T Bank Corp, running right up against resistance, so I'm going to pass. FNB, in a triangle on both weekly and daily, I'll pass. It's not clean enough for me. Citigroup. Citigroup looks interesting. This is a weekly trendline support. It just popped up a couple weeks ago. Had a new blue candle, which is a bullish candle in this program, off of support. Just as near these watermark, these 2 lines here, which are resistance lines. Not bad. I pass. FHN. Now I'm going to go quickly and see if anything looks as good as Vertiv. The trend lines, and I pay a lot of attention to them, are automatically written by Sager's tools. You see a lot of things that have got trend line resistance. WNC, Valley National, Huntington Bancorp. I mean, I like this one a lot, but it's stuck right in a wedge. I don't know which way it's going to break. CATY. PCAR. All right, I'm just going to say the one I like the most is VRTV. Now I want to go back into QEdge for a second because I need to have the, this is the Metastock symbol. Because now I'm going to open up Vital. I hope I opened Vital up. Maybe I didn't open Vital. All right, let's open up QVital. It'll open quickly. Pretty sure it's open. I must have closed it inadvertently. No worries. QVital is... QVital now I'm going to put Vertiv in there. And the advantage of QVital is it looks at the entire universe of stocks, much more than the US, but I'm limiting it to the United States because I don't trade overseas. So let's make sure it's talking to, it is. And let's then turn it on. Okay, so let's make this bigger for you to actually read it. So I can read it too, not that big, Jeffrey. So first thing it's going to do is going to go in here. It tells me Vertiv, trading companies and distributors, industrials, okay, price, market cap, earnings is positive. Next earnings are August 3rd. These are stocks that are in similar industry groups. okay? Peers. The light blue here, or whatever color that is, tells me that it's undervalued, has a lot of potential for a short squeeze. Here's a year over year quarter, this past quarter, 1 ago and 2 ago. Here it was a year and 3 years, so it's something that was a loser that's turned positive. That's interesting. These are its peers. Let's do a quick peer analysis. And again, I told you this is looking at all the stocks in its industry, extended world, not just in the S&P 1500. Let's do the 3 stars. So these are stocks that look like Vertiv. So if you're a top-down person, this is like an amazing tool. Let's see if it worked. So we looked at Vertiv before, kind of a flag, although flag is going up here. What I like is that it has got a new buy signal, a blue candle. It is close to resistance, and that would be the negative. Next one is called Radiant Logistics. No. Titan. No. BXC. Echo. TGH. HRI. Atlas Worldwide. CAI. So if I had to pick one of these, I would be looking at Vertiv. But now so during the day, I find this tool really neat to find the industry groups that are moving and what stocks within them are undervalued. Now, a lot of times you'll find stocks that are up at resistance, especially when we're at a market that's at resistance. Now, let's go into HGSI. Shut this down. Now, every tool that I'm using today are going to be sitting on my desktop, and I'm going to be using them during the market day. At night, since I don't really need real-time quotes except to look at the futures, I'm most likely going to be in HGSI. And I always start by looking at market analysis, major markets plus, hit the warehouse, take a sip of water. Now, indexes, I'm going to find the T1 view. I call it the top-down view. Just cap that on my water so I don't make a mess. So let's find the top-down view. I've got 38 different or market indexes or ETFs, and what it does is it gives me an idea of what's working and what's not working. So if you look at mostly 1 day and 5 day, what's working is utilities, gold, high yield. Is that high growth? No, that's bad for growth guys. Bitcoin got clobbered. Here's the IBD 50 got clobbered if you look at this way of ranking. So growth clearly not in favor. If we look at 5-day performance, 3.8 for gold miners. A couple of the ARCs bounced a little bit over 5 days. Bitcoin down 23%. No wonder my son is depressed. Some of the IBD stuff was down a lot as well. So I know already from the prior stuff we've looked at that growth was not doing well this week. Now what I want to do is I want to look at the indexes here. So let me play around. Let me go to, there I am. All right, I'm just opening things up. I changed size a little bit when I do these because I wish I could change size. I'm 6'5", wouldn't be bad. And about 250, 260, I'm being lighter, but COVID did not help me on that. I'm sure I'm not the only one that kind of like going to college again, gaining a little bit of weight. But my wife's got me already set to go on a weight loss plan. All right, just setting my stuff up. All right, so I'm going to look at the S&P. I'm going to make this tighter, only look at what's going on right here. As we said, sideways. This red line is a chandelier stop. It's on price. and everybody has this, and it's a chandelier exit. It's a great buy-sell target. So I look at this and I see that the S&P 500 has gone 1, 2, 3, 4, 5, 6, 7, 8, 9 bars underneath this. Until the S&P 500, in my mind, breaks above this chandelier stop, I have no business buying S&P 500 like stocks. Sideways move, in a squeeze between the 50 and that 17 and chandelier stop. At this point, I would stay away until it breaks one or the other. If not, you're just chopping around. So S&P, sideways move. If I look at the Dow Jones Industrial, here's the chandelier stop. Here we are going sideways underneath, chopping around above the 50. Could be a lot worse. Russell 2000, worse. Below the 50, below the 17, below the chandelier stop, but chopping around lower in the pattern. Chop. Chop is the name of the game this time. And the Nasdaq Composite, just look on the weekly how much sideways it's done below the chandelier. What would give me not an all clear signal, because I'm not going to say all clear in May, but what's going to make me feel better about this market? Closes above the chandelier stop. What happens when we close above the chandelier stop? Let's look back here. Here's the chandelier stop. We took it out, and then you now have a chandelier stop beneath price and a buy signal. So I'm watching that. I need an all clear before I get too excited. Now, if I wanted to find where things are working or not, I can look at the IBD 50 fund, and the word not comes to mind. Chop. I mean, how is this not chop? It's a definition of chop. Now, why do I think the market is potentially going to be higher next week? Although I'm not taking away my chop tone, because if this is the chop zone, we're at the bottom of the zone coming up. So we could run up 3, 4, 5 days before it's time to turn around. So I wouldn't be surprised to see if the market, especially in growth, rallies a couple days. No guarantee, and I think it's coming back down. My guess is before too long, we're going to actually test that 200-day moving average. If I go to the FANGs, not as extreme, but it too is below its 50 and below its chandelier stop. If I go and I look at biotech, perhaps a lone shining star, it too failed at that chandelier stop 2 days in a row. Without breaking through, why would you want to be in this? Now, of course, I took a little position off the 200, so I have some lebu, mostly because of the oncology meetings, which typically run the biotech sector up. But unless it gets above that chandelier stop, no business in going there. Semiconductors, they were leaders. Now they are below their chandelier stop, below the 50, threatening to get back above it. Them getting above it would be great. My son just texted me about Cathie Wood and her call on Bitcoin. Well, here's Cathie Wood to date. Now, Cathie Wood's a tale of two stories. Number one, Cathie Wood looks like a genius running this autonomous tech and others from the low of the market to the peak. She doesn't look as smart watching them come down. Remember, she's an ETF manager. I don't believe she's allowed to go all into cash, and she can't be buying things that are not in the description of her ETF. So she's tied to a thematic investor. I don't know if she can even go short. What I'm seeing here is that the autonomous tech is trading below its chandelier and below its 50. FinTech innovation at the 200, below the chandelier, below the 50. Genomic revolution, below everything. Innovation ETF, below everything. Israeli innovation, still below the 50. This one did take out its chandelier stop, kind of a specialized one, probably moved up with the promise of peace, although The issues with Hamas did not seem to impact on that ETF. Next generation internet, below everything. Space exploration, below the chandelier, below the 17. Not at 200, has been trading long enough. And then Bitcoin. This is for my son who, God forbid, he actually watches this thing. Bitcoin, major run up, pull back, stopped on the 200. You want to be a buyer here or a seller? This is a GBTC. I think this is incredibly manipulated. My son's a big believer. He's a believer that it goes to 1 million, which means this would go to 100. This would go to 1,000. I need to see a signal to be long and to buy. I don't see one here, so I am not bullish on Bitcoin. At some point, Bitcoin's going to move back up and retest old highs. I still am troubled by Bitcoin. The dollar is at the bottom of its range. It's kind of back to where it was at the end of 2020. It had an up day on Friday. I'm going to try not to make a big deal about one day. I will point out that it's gone further down and its relative strength has improved. Here is the weekly. Further down, relative strength has improved. If you're going to see reason to have a reversal, that divergence there between relative strength and price may be something telling me a story. I'm not even going to look at VIX. We've already looked at it enough, but let's look at gold. Weak dollar, gold finally broke above the 200. Didn't get rejected there, so that's interesting. So I suspect you got some gold in your portfolios. Silver, not as good. It's had a nice breakout here, but pulled back on Friday. And gold miners, 1, 2, 3. You got a week of sideways. It traded up on Monday and then sideways the rest of the week. Ended up big on the week because here's where it closed the prior Friday. You can see the weekly chart over on the right. Dollar stays weak. I expect these things to go higher. I've got some positions in gold, but you could also say it's kind of part of my hedging complex. If I look at industrial groups and I hit warehouse, I've got 174. If I look at 2-day force up, go where the money is, I've got 70. 2-day force down, I've got 16. Now, the problem is some of the big ones that we might be looking at as growth stocks are here. E-commerce, other financial investment, telecom, consumer electronics, precious metal, cruise lines, restaurants, home builders, things that have been working, life science equipment. So there are a lot of things in here that we might typically be looking at. Market rotates. Let's look at the leading groups. Renewable energy, it had an 11.6% move on the index this week. Are we ready to buy these? You tell me. Or you can't tell me. I'm talking to you alone. End phase. Yeah, it's turned around. It's got to get above the 50. It is above its stop. Looks interesting here. I wouldn't touch it until it moves above the 50, and even better if it retests. Its weekly bond goes red, which is in a bearish trend, and it had a red candle high here. I'm not yet convinced about end phase. You look at the earnings on some of these things, and they are impressive. Plug power, I could say the same things. It's in a downtrend. It has flipped its chandelier. It's got the 200 and the 50 with a bad cross coming. Still got a ways to go before I'd be interested. Maybe it's a great chance to buy. I think it's a lower risk if it gets above the 50. Sunrun, no. Solar Edge Tech, not yet. And then here's the index. So yes, it had a big move off of its lows. Maybe it's getting ready. All these stocks are so far down in their pattern, it's hard for me to get excited. Electrical power, GE, looks like the market, sideways market since March. I'm not going to tell you to play anything with GE. That's it before the index, but we could look at Blink, no. Generac, not now, maybe soon, but it's got to get above its chandelier, and it's 50 for me to want to play. Ideal, looks interesting. Don't know anything about this. It's only got a 50-day value, 186,000. I'm not going to tell you to buy a stock that's that lightly traded. I do like the pattern. If some of the other renewable energies start having kahunas breaking above the 50, I might pay them more attention. Internet media, Snap. Why is it in here? 24 million average shares traded, and it must have been up over the 2 days. Over the 2 days, it was up here and gave back a little bit. Red candle high at the 50. Looks like an ice hole failure setting up. This is why I look at that chandelier. I wouldn't buy this yet. Not yet for me. IAC Holdings, this is more interesting. Sideways move, broke out, flipped the chandelier. It's above the 50. I have to do my own research. This one I like better, but I really don't like this industry. I don't like its fundamentals. Google, I'm in Google. I held it through earnings. I'm profitable for a few pennies in the position. It's sitting right below the chandelier stop at the 17. Looks as good as anything I've shown you, but not perfect. It's got good earnings per share growth. I still wouldn't touch it unless it takes off the chandelier. Twitter, pull back to support. Not anything great so far. Semiconductors, here's Nvidia. Nvidia, I don't know why it's not a Bible gap up. It looks like it had a ton of volume. Let's see, volume was 18 million versus 7 million. I'm surprised that the machine, the HGSI calculates it just like Gil and Chris described it, so maybe it's not. Here you are off the 50 with a person's buy signal, pocket pivots, kahuna, and a mobile breakout on Thursday and a gap up on Friday. Nvidia looks interesting. Earnings are coming out. Beware. That's the best, kids, because I go analog devices, not much. Maybe it's okay, got above the 50. Doesn't look that exciting. Marvell, not yet. AMD, not yet. Maxim looks interesting. Mobile breaker from a squeeze, a couple of kahunas. It's already run some, so you'd have to make sure it's not too far extended. It's got earnings per share growth, so maybe I should put Marvell into my buy watch list. I still think Nvidia looks the best here. Intel, no. Texas Instruments, failed at the 50. All right, go back. Next group is application software. C Limited, I hold about 1,000 shares of this from my position. I write it down. I still believe this is going higher. Lots of volume this week. Big move up. It's got relative strength is 91%. Still a weekly bond goes red. The fundamentals aren't great. Just the street loves C Limited. Probably too expensive. Twillo, no. Take Two. Take Two did break above the 200 here. Didn't do much on Friday. Had a Bible gap up on Thursday. Mobile breakup from a squeeze. And kahunas, that looks interesting. And notice, similar to the dollar, relative strength was getting better as price was falling. And I thought this would be quick today. NetEase, another one looks interesting. Broke out here. 3 kahunas in about 6 days. I always like to see that. All right. Next one down is entertainment. We'll look at Viacom. I don't know this group at all. Gigantic volume and up day. That's the only reason why it's here. It didn't really do anything. Look at the weekly. You could see it did have a positive move on the week. Walt Disney, the rest are below it. We go to the next group. Specialty Pharma. Reata Pharma failed at the 200, something to watch, but I certainly wouldn't buy it till closed above the 200. Guardant Health, a leader in precision oncology, is too far down in the pattern for me. It was a darling. Zoetis Health, an animal health company, a good time to have bought it was back here. You're probably buying it late, but you did break out here. Mobile breakout squeeze, kahuna, and person buy signal on Thursday. I would have no problem buying Zoetis here. Tilray, not yet. Number 8, consumer finance. Again, MasterCard's below the 50. I don't like buying things below the 50, although I will. Something like this, which is setting up here, had a person buy, pocket pivot, Kahuna, mobile breakout. Notice the relative strength's improving as price is falling. This is an interesting picture, and I think lending core is already on my, we'll make sure it's on my buy list. Visa, at least it's above its 50. It's kind of in a sideways move. American Express looks better in that it's above the 50, taking out the 17 new person buy signal. Like that one better than Visa. Look at the earnings per share growth coming in. Biotech we talked about. This is a cheapy PDS. And it doesn't look like much there. Let me just go into data, add blank row. I think it's PDSB, isn't it? It wasn't a sideways move. It broke out on Thursday. Cup handle breakout, I guess. It's a really cheap stock. Went up because it's an oncology or cancer play. That looks interesting. All right, I'm going to abort the rest of these for a second. Unless it's beverages, I'm not a beverage fan. I'm getting tired. You're probably getting tired of me. Let's just look at my buy watch list. I know somebody actually took the list down and put it up online. We talk about what this means. These are not leaders. It is hard to buy leaders that are extended and already at their high jump. These represent what could be tomorrow's leaders, are stocks that I think look interesting and might be things that I buy. I typically set a buy point above the high of the day that I got the signal that I might want to buy it. I enter trades with a stop. That stop is predicated by why I entered the trade. My stops will change over time and go from a set stop, then a break-even stop, and then some type of a trailing stop. I don't buy things that pull back to a buy point. I buy things that move up to a buy point. So I'll give you an example. So first we can see my buy list is actually not giant this week. Spread out in a lot of different industry groups. Let's look at one that's potentially buyable, Copart. Earnings are out, so it's safe. So here's how I would look at Copart. Why do I like Copart? Well, Copart has been in a major uptrend for 5 years. It went through a lot of chop and mess, pulling back in here, and then is now coming back to challenge old highs. That's on the weekly. On the daily, ran up, gone sideways for quite some time. Earnings came out. We had a mobile breakout from a squeeze on Thursday. We took out the chandelier. We had a person buy signal, and we had pocket pivots and a kahuna. On Friday, we had another kahuna. We've got great earnings per share growth coming in. We trade 1 million shares a day, and earnings are out. So I like Copart. Now I would drop Copart into here, CPRT. Let's look at it. What do I see? I see blue bullish candle here. Just took out some resistance. Green bullish candle here, taking out resistance, broke out above a trend line. That dot here tells me on good volume. Come down here. Daily, weekly, and monthly bongos are green. I had a pocket pivot in a squeeze, PSR is behind, and I had a kahuna. I know that from TradeStation. It looks good there. We go on this view here. I had a high closed doji, and here's my breakout above prior resistance. So I like this. So now I want to go, how would I handle Copart? All right. The good news is it's pretty much a sideways story here. The bad news is it's the top of the range. I'll show you why that's bad news. So first I want to do is bring up the price. So I'm going to bring up a little notepad. Because I want you to understand how I think. Because my favorite neighbor, we don't buy things the same way. And I don't want people jumping in and buying something because it looked good on Friday if it doesn't perform on Monday. This is my style. It closed on Friday at 127.02. Okay. The high Friday was 127.58. Okay. So if I was to buy this, I have a buy stop, and I would say I'm only interested in buying the stock if it trades above the high of the day. So I'm going to have a buy stop at 127.65. Why? Because until proven otherwise, how do I know we're just not in a box? And I'd be buying it at the top of the box. I don't want to buy it at the top of the box. So I've got to prove to myself that we break out from that. Ultimately, we break out, we retest, and then we go higher. So that's my buy stop. Now, what's the low of that box? It would be the low of this day. The low is 118.03. Low last four, 118. That's not bad at all, 0.03. So I want to put my sell stop I'm going to put my initial sell stop, say at 117.95. So I am risking, let's get calculator up. So I'm doing 127.65 minus 117.95 equals. So I'm risking $9.70 per share, which is equal to 9.7 divided by 127.65 times 100. I'm risking 7.6%. I can do with that, 7.60% risk. I'll say I am willing to risk $2,500 of loss on this trade. I would buy 2,500 divided by 9.70, 260 shares. I'd also consider a call at the money a vertical call at the money, so it would be like a 2, which would be a 125, $135. I might do a butterfly at the money, which would be a 125, $135, $145. And I might do a unbalanced, I call it unbalanced butterfly, which would be a 125. And I'm going to tell you my method to my madness in a second. 140, 145. Now, I'm going to look right now at my phone while I'm doing this. And at the money call on Copart, CPRT, and let's look at, say we'll buy, let's look at a July. So does it have options? It has options. So if I look at a July call, single, and I do it at say 125, it will cost me $6.10. So that means for every share I control, I have to pay $6.10. We'll come back to this in a second. Vertical at the money, so 125, 135. And again, you should not do options unless you understand exactly what I'm talking about. And if you don't, you should learn them because I think it's a much better way of trading. So 125 to 135 July vertical is going to cost $4.15. And you'll understand the method to my madness in 1 second. I promise you, and if it's going to be worth your while. So I'm going to talk about each of these trades and when I take them and what the pros and the cons. If I do a butterfly at the money butterfly, so we go butterfly, July. I would never do this trade, by the way. So 125, 135, 145, 125, 145, 135. So if I did that, it's $2.60. And if I do unbalanced one and make this 140, it's $4.75. So these are the trades that I'm going to consider on Monday. Again, educational purposes only. If I buy the stock, I buy 260 shares at 127.65. So 260 times 127.65 equals $33,189. And I'm risking $9.70 times 260, so a little bit less than 2,600. All right, I said I'm willing to risk 2,500. Now, if I buy an at the money call, and let's just say I'm not playing any games, to control 260 shares, I'd have to buy 26 calls. Excuse me, let me get this right. Yeah, each call is 10. One call would be 10 shares. 10 calls would be 100 shares. So 26 calls, 26 times $6.10. So for $158, I'm missing something here. Oh, times another 0. Let me do this again. So for $6.10, and I bought 2,600, so I'm buying 260 shares, times 26 times, whoops, try this again. I'm tired. So I'm buying $6.10 times 26 calls times 10. I think I did this wrong again. Equals, yeah, it's not right. All right, let's clear. Okay. I'm looking at buying $6.10 per call times 26 calls equals, and each of those calls are 10 shares. So I'm paying $1,586. So $1,586, I am controlling the exact same amount that I would have controlled if I spent $33,189. I'd rather spend $1,586, wouldn't you? What's wrong? Or is it 15,000? No, it's 1,586. What's wrong with the picture here? The picture is these expire in July, the third Friday. Buying shares will go on forever. So if I buy these, the most I can lose is $6.10 a share versus the $9.70 per share. I'm paying $6.10 instead of paying the $127.65, and I have unlimited upside. That's pretty good. Let's say that my expectation is that the stock is going to go up 2 times my risk. So if my risk here is 970, let's say 1 times the risk. It's a choppy market. 1 times my risk is 135. So my target on this trade is 135. So on a vertical, I'm buying a 125 call for that same 610, but I'm selling a 135 call. It lowers my cost of business to $4.15. You multiply that by 260 and you'll get closer to $1,100 to do the trade. But the max I can win is $10 on this, minus the $4.15 or $5.85. Now I'm making more than it's costing if I max it out. What's the downside of this play? The downside is I can still lose $4.15. And the other downside is Copart gets bought for $180. I'm capped at $135. But here I am, I'm able to lower my cost from $6.10 to $4.15, about 30% lower cost, but I'm giving up some of the upside. Now I can lower my cost again in a butterfly where I'm buying a 125 call, selling 2 times that 135 calls, and then buying a 145 call. Now what this says is I've got a long spread 125 to 135, which costs me $4.15. And then I have a short spread where I'm selling the 135 and buying the 145, which lowered my cost $1.55. So now I only got to pay $2.60. So it's a cheap trade. You multiply that by 200, it's 520. So it's about $600 instead of $1,200 or $1,600. So it's a cheaper trade to take, controlling the same amount of stock. The difference here is I max out at 135, but then I lose every dollar it goes up towards 145, I go negative, and that at the end of the day, if the price is above 145, I get nothing. So my break even here is going to be about 137.60. So as long as we stay below 137.60, actually, it's even better than that. My break even is about 141. As long as it stays below 141, I will make money on this trade. But in a butterfly, you're capped at how much you can make. And once you go above the strike price on the short calls, you start to give back some of your profits. The most I can lose is 260 here. The most I can win is the same $10. The benefit of the butterfly is it costs me less to get in. I like an unbalanced butterfly where I can make now $15 between the 125 and the 140. Then I could potentially lose $5 of that because there's a short call spread, so a long 125, 140 and a short 140, 145. So if it goes to 160 here, I make $10. If it goes to 160 on this butterfly, I make nothing. $10 before cost, nothing before cost. If it goes to 160 on the vertical ATM, I make 10 before cost. If it goes to 160 on the call, I make 35 before cost. So the highest priced option is the biggest upside. The second highest one, I like this one a lot because I'm giving myself lots of room to go up and I've lowered my cost of entry. So those are the trades that I'm going to look at. And again, this is per share. And since there's 260 shares that I'm buying, you'd have to multiply each of these by 260. So 475 times 26 calls times, do this again. So $4.75 times 26 calls times 10 shares per call, $12.35 on this trade, and my upside is 15. If it goes through the max, my upside is 10. My downside is limited to 475. I like the unbalanced butterfly. If it goes way beyond 145, I look at my trade, I put in 475, I got back out 10. I can do over 200% versus my risk all day long. The only time it really hurts is if there's a buyout or something and I'm bummed out that I missed out. The reason why I like the options, the most expensive at $6.10 times 26 calls times 10 shares per call, $15.86 is the most I'm risking on this trade. I'd much rather risk $15.86 or less than put $33,000 in a trade or $25,000 or what would it be? $33,189 in this market. So I like Copart. That's how I look at it. I don't trigger a buy on any of my trades until I take out the prior high, because the last thing I want to do is be buying it down here and it comes all the way back to the bottom of my box. On the rest of the list, what stood out to me as being interesting or the most interesting, I showed you Lending Club already. I like to say there are great stocks here. This was not a great week. Cleveland Cliffs is not a buy yet, but I could draw a trend line here if I did those sort of things, and I do those sort of things. Somewhere around in here. We've pulled down to the trend line. Buying on support has been a good thing multiple times. I'm going to look for a buy signal coming in on Cleveland Cliffs, especially when I look up top and I look at its earnings per share growth versus the multiple under demand. Again, I wouldn't buy it until it bounces. Maybe it takes out the high here before I would be comfortable buying it. Because it still could. There's no rule that says it's got to follow what it's done. It still could come down here. Anything else here that really struck my fancy? Probably not. Yeah, 298,000 shares. I can't tell you to buy that. live end. Weekly, big move up, pull back here. On the daily, you had a breakout above the 50. You're behind, above your chandelier. Mobile breakout from a squeeze that's been going on for 2 months. 2 pocket pivots, a kahuna and a person buy. On that note, I'm going to say goodnight, goodbye, early. I thought I wasn't going to do this. I ended up doing a long one. Give me comments. I know I probably confuse people more than I help them when I do this stuff around how I look at the trade and what trade I'm going to take. Tell me what you think, if I should keep doing it, if I should do more, and we'll see you next week. Maybe, probably not. Next week, I probably will be putting things back together. Goodbye, everybody.